Welcome back. From extra costs for an online movie ticket to sales that never seem to end, Canada's Competition Bureau aims to have Canadian consumers' backs. But is it just nibbling at the edges of a much bigger problem? Vass Bednar is Executive Director of the Master of Public Policy program at McMaster University. Thanks for being with us.
Thanks for having me.
So we have seen a number of quite consumer-focused targets by the Competition Bureau. Does that feel important to you? Does that feel as though that is good work being done?
It feels important to me because what it's really tackling are a shift in business behavior, right? Where outside of just sheer size, right, independent of a firm's dominance, we see more and more companies kind of emulating each other and engaging in kind of similar tactics. So like that fee that you mentioned, that $1.50 fee that previously wasn't clearly advertised up front when you booked your movie ticket up online. For me, it's less about the $1.50, though a dollar is a dollar, and more about the signal it also sends to other firms. But yeah, that signal to consumers, to citizens, that the regulator sees this activity and kind of has our back and is nudging firms to kind of do a little bit better by us.
The other example that I gave struck me as so interesting, right? Sales that never end. So how can you call it a sale when that's just the price you were going to charge anyway? Again, it goes to kind of that deceptive marketing practice. You could say we've got bigger fish to fry in Canada around, how competitive some industries are. But I guess the argument might be, let's actually raise the bar for all behavior in every way.
Absolutely. And I don't think just because we saw a case like that, which was successful for the Bureau, that it's a significant shift away from kind of other larger areas of focus. I think we're seeing more kind of broader enforcement and more of a recognition of some of those behaviors that are occurring kind of in that digital age, and that people pick up from consumer vigilance. I hadn't realized that those sales were kind of advertised in perpetuity or what it means for someone in terms of, again, that false nature of the advertising.
We do, as Canadians, seem to accept, Vass, that we will have oligopolies, that we'll have, a few large players in some industries, banking, telecom, there are others. Do you think that the new rules that the Competition Bureau have been given, the law has changed and the tools available have changed, might shift some of that, and that some previous mergers might not survive these new rules?
I don't know for sure yet if we're going to look back on prior mergers here in Canada, though you've seen that trend elsewhere. But yes, expanded powers, the market study power that the Bureau has now, and that always makes it sound like superpowers or something, but their ability to compel the information they need from businesses to conduct their studies instead of just kind of asking politely, which was the official way we did it before, could help us have more successful initial investigations and also speed up that initial work, because I do think people expect a particular pace, a new pace, a more responsive pace. It's very promising. There have been a lot of changes to Canada's Core Competition Act over the last 2 years, and it does take time to see the results, plural, of those changes.
Should we expect long-term that a more competitive landscape creates more productivity? It's good for the economy, good for consumers.
Oh, this is such a contested space, but I do think so. I think there's lots of research and studies that kind of helps connect those dots across productivity and competition. And of course, corporate pricing behavior, too, has absolutely been changing and becoming more data-driven, more calibrated. And again, it challenges kind of economics 101 and forces us to rethink those priors.
So good to have you, Vass. Appreciate your time.
Thank you for having me.
Competition law in Canada did get tougher this year with some new rules, and we are seeing those play out in new investigations. What else might change then with this new regime? James Musgrove is national leader of the Competition, Antitrust and Foreign Investment Group at McMillan. Thanks for being with us.
Thanks very much for inviting me.
So I know there were kind of mixed reactions in the legal community and the business community about some of the changes to the Competition Act. Based on what you've seen so far, do you think the tools are the right ones?
I think some of the tools are good and some of them probably aren't so good. I think it's a sort of a mixed bag, partly because, as your previous guest was noting, there have been changes over the last couple of years, 2.5 years or so. We haven't quite got them all in force yet, but they've come kind of piecemeal rather than as a coherent group. And that means that we've got some of this and some of that, and I'm not sure it all works. There are some things that, seem better than others.
What are the things you worry most about in terms of, for instance, there are some tests of mergers that have changed. The way we look at them will change. Do you worry about that, or are there other things that are on your mind?
That's one of the things that I think could turn out to be problematic. And it's interesting that the tests, which we formalized into a statutory amendment, mergers above a certain size percentage of market type threshold will be presumed to be anti-competitive. That statutory test that we built into our act was based on guidance from the United States, which we see the change in administrations. That guidance may well change. So in other words, we may be moving to coordinate just when our primary trading partner may be going the other way. So that kind of rigidity being built into the statute, I think, is a bad idea. I think we perfectly capable of taking into consideration market share and all sorts of other things as part of the test without making it a statutory presumption.
Yeah, interesting. And of course, in the end, one of the tests that's been used is whether the consumer is well served. Is that the right approach when we think about some of those industries where there are a few dominant players in our market? And there are things about the Canadian market that make it unique, including vast geography, small population. Is it right to rethink how we measure whether a merger makes sense?
So for roughly speaking 40 years, we, with our new act, came in about 40 years ago, but the United States as well, and then others around the world as they adopted antitrust laws. I mean, we were one of the relatively early movers, has had a consumer standard when thinking about not only mergers, but conduct generally in the marketplace. Is it good or bad tends to be assessed on whether it hurts or won't hurt consumers. And we've had a second arrow to our quiver here in Canada, which has been important, which is efficiency, because, as you said, Canada is a big country, not a huge country, at least compared to the United States by way of population. And so we recognize it's important to have a certain level of efficiency in our economy as well. That's been the paradigm for, as I say, about 40 years, and it's been accepted around the world. That paradigm is or may be changing, not just here, but elsewhere, to take into consideration a broader set of social concerns, employment, for instance,
right.
If it's on labor. I think a consumer standard is reasonably clear, and that there are other tools to deal with other things, like, as I say, employment, social mobility, et cetera, But that is, in fact, the intellectual battle that's happening, and competition law is part of that.
All right, we've got to leave it there, James. It's so good to have you for this.
All right, well, it's a pleasure. Thanks very much.
Coming up, the market for contraband cigarettes comes with a hefty price for us all. We'll explore. That's still ahead. But first, iconic retailer Macy's normally gets attention this week for its Thanksgiving Day parade. The giant floats draw thousands to New York's parade route. But heads are being turned instead by word it will delay an earnings update after accounting irregularities were found. Turned out a single employee managed to hide $150 million in expenses over 3 years. It's not clear what the employee gained by doing it, but all anyone really wants to know is who on earth is minding the store. We're back after this.